In this video, I'm going to talk about how to maximize employed tax deductions, specifically 5 things that most employees don't know they should write off, and more critically, at the end of the video, why having a business, a properly set up business, will change your entire tax structure. Let's get going. The 3 things we're going to talk about specifically is how companies make money and individuals get taxed and how that can affect you as an employee. Number 2, how you might want to think about using 80,000 pages of the tax code versus just a simple little Schedule C or less, a 1040EZ. So yes, we are talking about that exciting thing called taxes today. And the big one, which is how a business in your family's life will change your entire tax structure for the rest of your life. That's the big one. So stay tuned for that one. That one's hot and my favorite. So in the beginning, I talked about the 5 things that standard employees do. Now, if you're an employee of your own company, these are going to be obvious and you're going to get through them quickly. But if you're an employee, and that's the only way you make money, first of all, I got to say, bad news. It's the worst kind of money because you're going to make it, you're going to get it taxed to pieces. Like, you got to think about, you got excited, you got a $60,000, $80,000, $100,000 job, and then the first time you get that paycheck, you're like, you've got to be kidding. It's like only this much because you're not in control when you are employed. Your employer's in control and they get all the big benefits. You don't, right? You get paid, take out all the deductions, Social Security, possibly contribute to your 401k, child, like whatever you do, and then you get what's left. And that's what you get to live on. So if you ever really want to quit your job, actually, you know what? If you watch the end of the video, I'm going to give you my quick formula on how to quit your job very quickly. It's not replacing your income. So the 5 things, I'm going to read them because they're like, wah, 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 right? Like Charlie Brown's mother, So I'm going to read them off quickly. We'll get them over with. So the 5 that are obvious that you need, and if you're doing your own taxes, which if you really want to be more sophisticated, I have a whole team who will do them for you. But here's the 5 that you need to do. The standard deduction. 200, like in 2021, as a single individual, you can write off $12,550. As a couple, $25,100. The itemized deductions that you can do just straight on your 1040EZ are your medical, dental, state and local taxes, including your property taxes, your mortgage interest, and then any gifts or charitable contributions to a 501(c). Your contributions to a 401k or IRA can be deducted, and your child tax credits. So those are the obvious as an employee that you can go through and deduct, right? And a lot of people ask those questions, but then they'll go on and say, well, what about the rest of it? Well, that's kind of it. So why start your own company? Well, there's 80,000 pages of tax code, and having your own company then gives you the legal right to do these deductions, right? If you're an employee, you don't get them. You can write off your phone, your computer, your car. These are portions of it, right? If you're using it for personal use, you can't write it off. If you're using it for business use, you can, right? Your camera, your home office, your kids could be employed by the company. So now your kids become a tax write-off. When you go on what you used to do vacations, we're going to teach you now from your business perspective, especially if you're in real estate. I mean, you can go do real estate all over the world. I'm in many direct sales companies. One for goal setting. Well, you can do goal setting meetings all over the world. I'm in a direct sales wine company. You can drink wine all over the world, do wine tastings, write that off. So all of a sudden, those vacations that you had to save up for and all of a sudden did a huge spend once or twice a year, now they can become a business trip and they can be, used throughout the year in different occasions. There are so many deductions that you cannot take advantage of if you're just going to stay employed. So I'm not saying run out and quit your job, right? The whole title of this was how to maximize employed tax deductions. And some of you are employed and we need you employed, right? You're the police, you are firemen, you are military, you are, you're doing things that are critical to our community. But to do what you really want to do and act, think, and make money the way the wealthy do, you got to have a company. Do that with your kids. I have videos on that. We can link away and show you videos of how to do businesses with your kids. But I'm talking to you specifically. You can, by law, be employed, have a company, be employed by that company, and have 2 employments. Now, we would have to really look at whether that makes sense or not, because if you're making quite a bit of money in your job, the last thing you need is more money of that category. We want your company to be extremely profitable, making money, And then all the deductions get to go first. So think about it. You can make money in a job, be taxed to pieces, and then spend. Or you can have a company, spend all your deductions, and then get taxed. So where do you want taxed in your system? A lot of my clients want both. And a lot of them over time, when the business becomes successful, look at the other job and say, maybe I move over here. In fact, I had a client, a brand new client, just buy some land. I had a bunch of land lots in Texas, just bought lots, was a retired police officer, and is looking now to doing more real estate, gave him some different strategies. I have a woman who was a policeman in San Francisco, had some babies, got shot, quit, and that business, because of her skill set, she started doing a private eye business, background checks, due diligence for folks, has a well into six-figure business. So we're not going to have you jump out of your employee to just do a business, but I can tell you, the best thing is to do both. And if you really get it going, do your business, do your 81,000 pages of tax code, because the companies make money and get deductions, individuals get taxed. So I hope you get that principle. If you are interested, I'm just curious what your comments are at this point. Like, I know when I teach this to a lot of people in a live audience, they would just be irritated. So how many of you are a little irritated that no one's told you this before, right? This is sort of the obvious. The system's not broke, it was built this way, and it's built to not tell you these things. I am an advocate for entrepreneurs, and I've been an advocate all the time. Especially since the pandemic, we have been fighting for entrepreneurs to stay alive, get in business, and never endure being laid off or furloughed and taken out of a job. A lot of people say, job super security. Having your entrepreneurial venture is super security, and that's what I want. And I want you to be able to take the most deductions you could ever take. So specifically, what do I mean when I talk about W-2 income versus corporate income, which is one of the points I want to talk about? W-2 income is that process of making money, having it taxed, and spending and living on what's left. Corporate income is having a variety of companies. Ideally start with number one, but then that company can be make so much money that it actually can invest in another company that goes and buys real estate or another business. So over time, the goal is that you have corporate income with great deductions. You go on business trips, not on vacation. Your kids are employed. That you have Roth IRAs, which are tax-deferred, tax-free vehicles for all of the growth of your investments for you, and your kids can have all of them. So just think about it. Do the math. There's a lot of calculators that are out on the internet. You can do the math yourself. Put in what your corporate income is, what your current tax structure is, and then put in what, comparable. Let's do that. Let's put in a comparable, like what a company would make. So if you make $100,000 as an employee, weigh that out to what you get to take home and what the tax deductions are versus owning a company with all the deductions, including your children, and what you get to bring home for you and your family using that process. So there's a lot of calculators out there that can help you just validate what I've just said. But I did promise you one thing, which was how to quit your job. So, a lot of people that want to quit your job and jump, right, and jump over to corporate income, you think that replacing your income is the goal, right? 100 to 100 or 60 to 60. That's not the goal. Here's the goal, and very strategically, I've done this for 2 decades. This is how you quit your job successfully and jump to the entrepreneurial venture, and when you do it. So you actually look at the bottom line, what goes into your bank account. So if you make, say, $100,000, by the time you got your deductions off, maybe only 6 figures, maybe only 6,000 goes into your checking account, maybe 6,500, right? Or 7,000. Let's just use 7,000 for easy math. So you only make 7,000 a month, really, because all the deductions go off the top. So really, your lifestyle, like what you're used to living on, is 7. Now, we're going to run a company, so you're going to need some more. But here is notoriously all the time, work systematically, because I've had so many people. I quit this way. I quit my job. I had a job for a little minute over at Chevron, and then I jumped and became an entrepreneur, was a master distributor of the cash flow game. And here's exactly what I did, and I teach it to everyone else. All you need to replace, because remember, you have a job. And probably this business is only getting maybe 15, 20 hours of your time, maybe. So if you can replace the income to half of what your take-home pay is, so let's just say you get your business to $3,500 a month, and then you quit and you take that 40 hours and apply it to your business, I promise you will blow by 7,000. And we need you to. I need you to get to 10, because guess what that extra 3,000 is going to do? It's going to hire marketing people. It's going to hire your social media people. It's going to get your website done. It's going to get all these things done to get your corporation set up. It's going to pay for that. So that extra money will be used to grow your company. I promise you, you do that strategy, you can easily jump from a 6-figure job into a 6-figure business without a lot of financial pain and stress to your family. So if this is interesting to you, I want to know who you are. Right? I want to know where you are in jumping maybe from an employee to a W-2 income earner. So I have an amazing quiz. It's called the Financial Personality Quiz. And it's going to put you into one of 4 categories of how you live your life financially today. And then I have a blueprint to take you where you want to go, whether that's becoming a 100,000-aire, whether that's becoming a millionaire, or bigger than that, creating generational wealth for you and your family. So click on the link. It's in the description. Take the quiz. Takes 30, 40 seconds. And my team will be back in touch with you within 24 hours of taking that quiz. And let's have a conversation about what you want and how I can help you get there.